Dan Clifton is head of policy research at Strategas. Dan, welcome. And striking a bit more cautious note at this point. Why?
Well, I love that comment that the Citigroup CEO just made. We'll be okay. Why do we need to be okay? Why can't we be great, right? And so we have some challenges in front of us. This is a pretty large consumption-based tax that was put on American consumers. I'm okay with that as long as you're reducing taxes on savings and investment. And so we're going to have a bit of a ramp up as that timeline begins to approach. Right now, there's a lot of inventory. Right now, you have some very strong tax refund season, lower oil prices. A lot of that's helping us carry us through. But as you start to get to June, the inventory start running down, small businesses start to get constrained, there's going to be a lot more pressure that starts to build on the trade policy front. And the question is, how are we going to sterilize that? Is the Fed going to cut rates? The Fed has given no indication that it's going to cut rates anytime soon. And so that means that Congress is going to have to act on it on the tax side. I would say, however, I am very pleased that you're seeing this more practical Trump administration. They're realizing that they went a little bit too far, and they're making adjustments as they need to. So the auto tariffs, the lower China tariffs that you just referenced, no firing Jay Powell, they're easing those conditions. Yeah. But at some point, it's still a $400 billion tax increase, not a $600 billion tax increase. And it will need to be offset by this tax bill that's coming through Congress.
I think that's well put. We also spoke with one business on Friday, Balsam Brands, where 80% of its artificial Christmas trees are made in China. Here's what the CEO told us about his potential tariff bill.
We would have over $100 million in tariffs that we would have due. Last year, we paid $1 million. It's a very big increase. That's if we brought everything we ordered this year in at today's rates. Now, we have paused orders. We've canceled orders. There's no way we can do that.
I mean, Dan, to put it bluntly, he's been in Washington 3 times this past month. There's no way out for that company except for an exemption, kicking the can down the road. And you're hearing this more and more, that all of these companies and businesses are going, you know what, maybe they'll just punt on all of this.
Yeah. Well, I think that's a good point. Washington only acts when there's a crisis. So where is that moment? For COVID, it was the NBA shutting down. And we're just not going to have a moment like that anytime soon. And so that means that this just drifts along. And what that does is it puts at risk back to school, and it definitely puts at risk holiday shopping season. Now, my sense here is that if you came in and Congress was able to deliver a very large front-loaded tax cut on individual and corporate tax rates, it would give these companies a little bit more flexibility as they start dealing with how they're going to adopt to this new world of tariffs. I think that would be particularly important for some of the companies that have exclusively outside supply chains. And there's no talk of that. What we're talking about is good stuff right now in Congress. 100% capital expensing, writing off factory purchases. Those are all great ideas for a pre-April 2nd world before these big tariffs started to come out. And I just don't think it's going to be sufficient. Kelly, you and I, we were on this show a lot in 2017, 2018. We did the tax cut first, and then we did modest tariffs. Today, it's the complete opposite. We're doing big tariffs, and then we're doing modest fiscal policy, and that has to change. So delaying these tariffs and then aligning it with fiscal policy and doing large fiscal policy will make the situation a lot easier. We're just not there yet as Congress begins deliberations on this tax bill.
Again, well.